Imagine being able to keep more of your hard-earned money without having to worry about the tax man taking a big chunk of it. That's exactly what the no tax on tips deduction promises. But don't get too excited just yet. This game-changing provision, introduced by President Donald Trump, offers financial planning opportunities for certain workers. But experts warn it's too soon to make any major moves. The deduction allows eligible workers to deduct up to $25,000 in qualified tips per year from 2025 through 2028. But the rule, and this is the part most people miss, the no tax on tips provision is part of Trump's big, beautiful bill, which aims to provide tax deductions for working Americans and seniors. Thomas Gorczynski, a Tempe, Arizona-based enrolled agent, advises workers to hold off on making any major financial decisions until more guidance is available. My big recommendation right now is to not make any major moves, he says. The Treasury and IRS are expected to release further details by early October, but the exact timing remains unclear. Melanie Lauritsen, Vice President of Tax Policy and Advocacy with the American Institute of Certified Public Accountants, echoes this sentiment, saying, "We still need a lot more guidance." The lack of clarity is causing confusion, especially when it comes to which jobs qualify for the deduction. Sub-occupations on the preliminary list may be eligible, while others may not. For instance, jobs in healthcare, legal and financial services, performing arts, sports, and more are considered specified service trade or business, SSTB, and may not qualify. Moreover, eligibility may depend on whether you're a W-2 worker or self-employed. Experts say that further clarification is needed to understand which occupations qualify and how the official list will interact with the SSTBs. So what does this mean for tax planning opportunities? With key questions about the no tax on tips deduction unclear, some workers are at a standstill with year-end planning decisions. One potential strategy could be reducing modified adjusted gross income, MAGI, to qualify for the deduction, which phases out once MAGI exceeds $150,000. Another example could include retirement savings, but it's uncertain whether this move will reduce net business income and limit the tips deduction. Gorczynski notes that this deduction is going to be a key metric when we're doing planning for sole proprietor clients, but experts need further guidance to maximize the overall tax break. Lauritsen advises workers to get a grasp of what the law says and what it means, and to consult with a tax professional or financial advisor sooner rather than later. But here's the million-dollar question. Will the no tax on tips deduction live up to its promise, or will it fall short? We want to hear from you. Do you think the no tax on tips deduction will benefit workers, or will it create more complexity and confusion? Share your thoughts in the comments below. And this is the part where we ask, what do you think is the most important aspect of the no tax on tips deduction that needs to be clarified? Is it the list of eligible occupations, the interaction with SSTBs, or something else entirely? Let us know, and let's get the conversation started.